All right. So, welcome everyone. One more week, one more weekly wrap with Pankaj Pandey sir. Sir, बहुत ही interesting week था wherein I think one of the highlights was VIX का crash होना एकदम suddenly we saw 20% down in just a few minutes. तो and then the market went मतलब फिर एक ऐसा sideways चला एक दिन तो किसी दिन एकदम straight up चला गया randomly. क्या चल रहा है सर मार्केट में क्या हो रहा है अभी?
So hi, good evening, Vishu. This week was quite interesting. We have seen Nifty and Bank Nifty gaining 1%, and largely because we've seen the overall VIX coming down because of two factors. One, obviously, the current growth template is largely going to remain unchanged. The other factor is that the geopolitical tensions have come down. So it is a combination of these two things which is leading to a comfort on the market, and which is why we feel that pre-election rally is on the cards with levels like 23,400 on the higher side. And if I have to sort of put some support, that should be around 21,700. And after a long period of time, our sense is that the Bank Nifty is going to do relatively better compared to Nifty. So from that perspective, our sense is going forward, the Bank Nifty is probably going to drive Nifty from here on, and which again means that you'll see a lot of action, especially on the bank side. The good part also is that the number of stocks above 50-day exponential moving average that has sort of inched up to 83%. So overall, a good setup. And I think जिस हिसाब से overall market का direction है, मुझे लगता है कि new high is very much on the cards.
Right. Awesome. Awesome. That's great to hear, sir. So, speaking of Bank Nifty to lead the sector, uh, I think काफी सारे results we have had from the banking side this week. We had Axis Bank, we had IndusInd, not exactly a bank, but Bajaj Finance as well was there. Then we had Kotak Mahindra Bank as well, I think. So, what is the picture that is coming out of these results?
So I think banking results were quite okay. I think Axis Bank definitely a very strong set of numbers. So they delivered 14% kind of overall growth on. So good kind of a growth in both on the credit side as well as on the deposit side. And I think this is one of the few banks which have actually increased their margins to 4.06%. And so from that perspective, numbers are good. Management is clearly saying that they are going to grow at 3 to 4% higher than the industry growth rate. So no major challenge is there. And I think it's trading at quite attractive at 1.7 times. I think IndusInd Bank also looks attractive from the perspective that it was a very steady quarter for them, and we've seen advances growth coming at 18 odd percent. I think what IndusInd Bank is now looking to do is diversify their book a bit, because see, earlier they were auto heavy, especially CV heavy. Now they are looking to sort of go into car financing. Also, they had very little of home loan portfolio, so they are looking to sort of develop the home loan portfolio. So overall, they're going to sort of maintain a decent credit growth of 18 to 22%, and margins are remaining at 4.2 to 4.3, which is what has come in the recent quarter. See, in good times, IndusInd Bank used to command 2 multiple, and currently it is trading at 1.4. So if it is sort of delivers a very steady performance, then I think this is another bank besides Axis which should do well. But something similar cannot be really said in the same breath for Bajaj Finance, because Bajaj Finance, if you sort of look at, has while the AUM growth numbers have already been sort of disclosed by Bajaj Finance, but the challenge with Bajaj Finance is that overall for them there is a moderation in the margins. And what is expected is that while ROAs are going to be maintained, but sense is that with kind of pressure what you're seeing in the margins, and mind you, it's already one of the richest NBFCs in terms of multiples. So I think somewhere down the line they're sort of meeting short of expectation, because when you price for perfection, you can't leave anything unturned. And so growth is a bit softer, and then margins is also expected to be a bit weaker. So that sort of has impacted.
Right, sir. And finally, Kotak Mahindra Bank also, sir, I think RBI has placed some restrictions. So I think a lot of people are perplexed around it. So what has happened, and where will we see the impact on this, sir?
So overall, Kotak Mahindra Bank, I think, see, the challenge with Kotak Mahindra Bank is that this bank wanted to sort of play digital. So they've been acquiring customers digitally. And that is where the RBI regulatory forbearance has come in. So which means that they will not be able to onboard new customers online or through mobile banking channel. And that is sort of a challenge because this is one bank which was not really banking on the physical branches expansion, unlike some of the other tier one banks. So which is why it is going to sort of pinch Kotak Mahindra Bank even more. And that is the kind of a price reaction we've seen. And mind you, credit card as a book, while it might sort of contribute 4 to 5%, but the kind of challenges what you see is because it's a very high NIM or high margin kind of a book. So if that gets impacted, things will be tough for Kotak Mahindra Bank. We have already seen Bank of Baroda witnessing a similar kind of a regulatory forbearance, and it takes a decent amount of time for some of these issues to sort of get resolved. So Kotak Mahindra Bank probably in the near to medium term is not going to do much.
Sir, I think another thing that has been very much talked about this week was the tier 2 IT companies. उनके भी काफी सारों के results आए and what happened there, sir?
So like tier 1 IT companies, tier 2 IT companies also largely disappointed. So I think the kind of premium tier 2 IT companies used to get because they used to deliver better growth rate, I think that sort of premium has sort of come off to some extent. And I'll start with some of the names. Say, for example, Cyient, the performance was quite soft. And I think even when you look at their guidance, it is clearly coming out as that there is moderation in growth ahead. Now, the challenge with some of these companies is that they were richly valued. So if your growth is sort of tapering off or not really coming up to the expected lines, then you see a negative price reaction, and which is what has been with most of the cases. I think there has been a downward revision in most of the growth of these companies. I think the only positive highlight I would say is Tech Mahindra. I mean, now Tech Mahindra is already a troubled name in IT because this is one company which has a margin profile of 7%. I mean, typically all your IT companies make a 15 to 20% kind of margins, and the bigger ones make, in fact, even more than that. Now, the new CEO has come, so he has clearly guided for industry-leading growth. Plus, he's guiding for about 15% kind of a margins in the next 2 3 years. So, Vision 2027 he has come up with. So from that perspective, I think this is one stock which looks attractive to us, and which is why we feel that this is the only stock which is a buy according to us, and where the target price is 1550. Now, some of the, again, troubled names was LTI Mindtree. So LTI Mindtree came up with this merger of 2 3 companies. Now, the expectation was that the synergies will come. In fact, the synergies are still sort of missing. Valuations are quite rich from that perspective that it's trading at 22 times. While the company is saying that they will go to margin profile like say 17, 18 odd percent, but this quarter the margins were also sort of a miss. And mind you, the top line growth has come into single digits. So that is not a very great thing to sort of look at. And I think even same is the problem with even Persistent also. So Persistent also was guiding for better growth rate. The growth rate is going to come down. And probably the company says that the margin improvement will happen, but I think that will happen over a period of 2 3 years. So which is really not liked by the market. So if all of this happens and you are trading at 32 times, so things really do not look very rosy for tier 2 IT companies. And I think the US outlook is still quite sort of cloudy. So I think IT probably is going to sort of do more of a time and some bit of a price correction. Nothing looks exciting in IT except for Tech Mahindra, which I just highlighted.
Right, sir. I think another sector that has been kind of not very exciting is FMCG. I don't think many people are right now in a very great bullish mood for FMCG. Is that the case, sir?
Absolutely. I think FMCG, if you look at most of the companies, take the example of HUL, so they're talking of, I think, 1 or 2% kind of a volume growth. That's quite less. And I think the other challenge is that some of these companies have taken aggressive price hikes, which is why their margin profile is very good, but that has impacted growth. And rural segment is still taking time to sort of pick up. See, the only engine working for them was the premium segment where you could sort of get better margins. So growth is quite subpar for most of the companies, which is what the numbers have come out with. So really, in a near to medium term, nothing looks exciting in the FMCG as a pack. And mind you, all these companies are quite richly valued at 50 times forward, 2 year forward, which is really not cheap. If you are going to sort of deliver, even in a best case scenario, if you take a 4-5% kind of a pricing growth is what they take. So they are not going to sort of cross double-digit growth. So structurally, their earnings are going to underperform Nifty. So I think the sector is going to remain on the sidelines for some time.
Right, sir. So talking about the brighter side of things, I think we have some good news coming from pharma contract research and manufacturing companies, and the cement has also been very uh, good for the people.
So coming to pharma, I think what is clearly sort of getting highlighted is the kind of inquiries a lot of these CRAMS companies are coming. So for example, DV's out of turn has announced a capex of nearly 700 crores. And that is basically for a long-term supply agreement with a customer, which they have not named. So this is the first kind of a disclosure done by a company for a work they want to do and specific capex requirement they have announced. I think Syngene also is a CRAMS company, announced weak set of numbers. I think the highlight is that the kind of inquiries what they are getting. So I think it looks like that probably 1 or 2 quarters down the line, you will see all these businesses sort of getting revived. And not only that, even Glenmark Life Sciences, so they are expecting to add 2 new customers. So as of now, they've got 3 customers. So in the second half of this financial year, they're looking to add 2 more customers. I think what is driving this is that there is a potential fear, especially in the US market, that the US will come up with a Biosecure Act, which would mean that they are going to sort of put stringent norms in securing contracts from Chinese CRAMS companies. So there is obviously a China plus one strategy working out here also as well. And mind you, these are long-term contracts. CRAMS is not a 1 year, 2 year contract. So these are long-term contracts with long-term benefits coming in. So I think a very positive development in the pharma as a sort of a overall space. Now, coming to cement, I think mixed bag set of numbers, I would say. ACC came out with good set of numbers, so the volume growth was quite good. Now, if you look at ACC, volume growth was 22%, but since the pricing is soft, so top line growth was 13%. What is also helping ACC is that see Ambuja is or Adani as a group is quite big, so they have acquired Sanghi Cement. Also, Sanghi was underutilized in terms of capacity, so they are sort of buying cement from them through a master supply agreement and supplying. So that is also helping the volumes of ACC increase. But all said and done, volume growth was very good. The EBITDA margin or EBITDA per ton improvement was also quite strong. And what we are also liking is the kind of multiples. I mean, your tier one big player command 20 times or in excess of EV by EBITDA multiple. ACC is commanding half of it at 10 times. So we feel that this is one of the few cement stocks which can be bought with a target price of 3,225. Now, Dalmia, on the other hand, was weak set of numbers. So somewhere down the line, that number sort of disappointed. Because one, while the volume growth was there, the margin profile was weak. The company was quite sort of cautious on the price hike. So I think that's a sort of a negative commentary we have got. But unless big players don't come out with numbers, I think it's still too premature to sort of say that cement may not really sort of do well. ACC that way has come up or with a very good set of numbers.
Right. Awesome, sir. And finally, sir, our final topic of the day is, of course, hidden gem of the week. So what will it be?
So while I have been recommending a lot of mid caps and small caps, this time I thought I should recommend a large cap. I think metal is one sector which is sort of quite buzzing of late. Now, Hindalco is I would recommend with a target price of 780. And the reason for liking Hindalco is structurally as the economy grows, the demand for aluminium increases because this is one metal which is quite lighter. If you have to sort of reduce the weight of a vehicle, you use more of aluminium. Similarly, aluminium is used in a lot of places. Now, Hindalco is one of the leading producers of aluminium now. While they have operations in India and US, in both the geographies, they are sort of expanding. In India, they are sort of expanding to, say, for example, downstream products. So, for example, they are doing a capacity expansion, which will lead to production of more alloy wheels. So, in auto, if you look at alloy wheels, are sort of a common thing to be there. Then in US also, they are sort of doing a decent amount of downstream expansion. So when you sort of expand downstream, your margin profile sort of keeps getting better, and which is what we feel that the Hindalco offers at this point in time. And also, since the metal as the overall pack is doing well, we feel that Hindalco is one company which should sort of do well. And in case if the manufacturing element of the economy sort of picks up, uh, especially even on the defense side or in the aircraft manufacturing side, I think this another company or this company ideally should benefit. Or if we manufacture a lot of coaches which have a lot of aluminum content in it, then there are ample demand drivers for this company to sort of keep doing well, and which is why we feel that Hindalco can be a portfolio pick at current levels.
Right. Amazing, sir. Thank you. Thank you so much for that, sir. And thank you for that weekly wrap. We'll be back next week. Till then, have a green week ahead and a very nice weekend. Thank you.
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.